You win the game if you beat inflation. Inflation is a critical economic indicator that reflects the rate at which the general price level of goods and services rises, eroding purchasing power. Inflation has been a persistent concern for policymakers and consumers alike. Understanding its causes, effects, and strategies to mitigate its impact is essential for individuals looking to protect their financial well-being. What is inflation? Inflation, in simple terms, is the increase in the prices of goods and services over time. When inflation happens, each unit of currency buys fewer goods and services, meaning your money doesn't go as far as it used to. For example, if a loaf of bread costs $30 today and $33 next year, now you cannot buy the same bread in $30 next year. That's an example of inflation. Essentially, inflation reduces the purchasing power of your money. Inflation is measured by the Consumer Price Index, CPI, or the Wholesale Price Index, WPI. The CPI tracks the prices of a basket of consumer goods and services, while the WPI focuses on wholesale prices. Causes of inflation. Demand pull inflation. This occurs when demand for goods and services exceeds supply. Factors such as increased consumer spending, government expenditure, and economic growth can drive up demand. Cost push inflation. Rising costs of production, such as labor, raw materials, and energy, can lead to higher prices. For instance, an increase in oil prices can significantly impact transportation and production costs. Monetary policy. Excessive money supply in the economy can lead to inflation. If the central bank prints more money without a corresponding increase in economic output, inflation is likely to rise. Supply chain disruptions. Events such as natural disasters, pandemics, or geopolitical tensions can disrupt supply chains, leading to shortages and increased prices. Imported inflation. Fluctuations in global commodity prices can affect domestic inflation. For example, rising prices of imported goods can increase overall price levels in the economy. Effects of inflation. Inflation affects various aspects of the economy and individual financial health. Erosion of purchasing power. As prices rise, the purchasing power of money decreases, meaning consumers can buy less with the same amount of money. Interest rates. Central banks may raise interest rates to combat inflation, leading to higher borrowing costs for consumers and businesses. Savings impact. Inflation can erode the real value of savings, making it essential for individuals to find ways to preserve their wealth. Investment decisions. Uncertainty about future inflation can affect business investment and consumer spending. How to beat inflation. While inflation can pose significant challenges, individuals can adopt various strategies to mitigate its impact. Invest in assets that outpace inflation. Equities. Historically, stocks have provided returns that outstrip inflation over the long term. Investing in a diversified portfolio of equities can help protect against inflation. Real estate. Property values often increase with inflation, making real estate a potential hedge. Rental income can also rise with inflation, providing additional income. Gold. As a traditional store of value, gold often performs well during inflationary periods. Consider allocating a portion of your portfolio to gold ETFs and SGBs. Consider inflation-linked bonds. Investors can consider inflation-linked bonds, IIBs, issued by the government. These bonds provide returns that adjust based on inflation, helping to preserve purchasing power. Build a robust emergency fund. Having a sufficient emergency fund can help you weather financial uncertainties during inflationary periods. This fund should ideally cover 6 to 12 months of living expenses. Diversify investments. A diversified investment strategy across various asset classes can help mitigate risk. This includes a mix of equities, debt instruments, real estate, and commodities. Focus on skill development. Investing in your skills can lead to higher earning potential. Continuous learning and skill enhancement can help you secure better job opportunities and salary increments that outpace inflation. Budgeting and expense management. Effective budgeting can help you manage expenses in an inflationary environment. Focus on identifying essential versus discretionary spending and adjust accordingly. Stay informed. Keeping abreast of economic trends and policy changes can help you make informed investment decisions. Understanding the factors driving inflation can enable you to adjust your financial strategies proactively. Conclusion. Inflation is an inevitable part of any economy. While it poses challenges, understanding its causes and effects can empower individuals to take proactive measures. By investing wisely, diversifying assets, and managing expenses effectively, you can protect your purchasing power and secure your financial future in an inflationary environment. Always consider consulting with a financial advisor to tailor strategies that align with your specific financial goals and circumstances. Thank you for watching.